What does today's action tell you about where we could be going?
Yeah, thanks, Scott. So I think Josh already mentioned a couple of the capitulatory type indicators that we got. We saw 65% of S&P stocks make a one-month low yesterday. That's the most since December 26th. We had about half of the stocks below their lower Bollinger Band. So there's some readings that are consistent with, getting within 1% or 2% of a tradable low. I think what a lot of people saw when they came in this morning with the futures being up is they would have liked to see them down, a down open. And I think what we've seen lately we actually did get the down open. It was just in the S&P futures. They got down to 27.75 or so last night. And I think if you go back to the Christmas low, the Christmas Eve low, the actual market bottomed on the 24th and Christmas Eve. The S&P futures actually made a lower low on the reopen on the 26th, and we never tested that low. So I think when you have these volatile after-hour sessions, sometimes you don't actually get the down open that you would like to see. So I think that's kind of where we're at now. Now, where can we go from here? We're thinking that you get back up towards the 50-day on the S&P, which is around 29.30, and that's going to be the first real litmus test, because one of the things that we can do in markets, we can identify these kind of tradable lows. We just don't know until hindsight whether they're a more meaningful low or not.
Sure.
And the two examples I would use, December 24th being a more meaningful low, but we also had similar conditions on October 11th of last year, and that just led to a small bounce. It failed under the 50-day, and then we ultimately headed lower. So that's kind of where we find ourselves right now.
Hey, Jonathan, it's Josh Brown. I read your note this weekend. So for the people watching that don't necessarily have a ton of experience using technical analysis to come up with buy points and sell points, what would you tell people witnessing a stock market that's just sold off 5%? Should they be looking for names that have been hit the hardest to play for the reversal? Or should they be more focused on the stocks that have held up the best right now? Because if we do turn, those should be the leaders in the next phase. What would be just like your blanket way of looking at that for people that are a little bit newer to technical trading?
I think if you're talking more of a medium-term time frame, let's say more than 3 months, then I would say the latter. You want to look for names that have held up the best. Those typically come out of the correction as leadership. If we're talking the next couple of days, then anything's possible, and sometimes the really beaten down ones do see a bigger bounce back. But generally speaking, you're better off going with the names that have held up better. And it's a little bit tough in this tape because when you get the headline-driven moves, correlations go up and everything kind of moves together. So it's a little more difficult to kind of find those names, but they're certainly out there.